Have you ever wondered how customs determine the value of imported goods? Getting it wrong could lead to hefty fines, shipment delays, and even legal trouble. Understanding customs valuation is essential for any importer, and today, we're breaking it all down. Here is why it matters for your business. Trade compliance is more than just following rules. It's about ensuring your business runs smoothly without unnecessary costs. Customs authorities worldwide use a standardized approach to valuation, ensuring fair trade while preventing fraud and misdeclarations. But did you know that simply misclassifying an assist or misunderstanding deductions could cost your company thousands? That's why it's crucial to understand how to determine the correct value of your imports. Transaction value is the primary method of valuation in international trade. In most cases, customs valuation starts with transaction value, the price paid or payable for imported goods. This is the foundation of trade compliance. However, this value isn't always straightforward. Adjustments may be necessary based on factors like dutiable assists, royalties, or selling commissions. Likewise, certain costs, such as international freight or post-importation expenses, should be excluded. Let's say an importer purchases medical equipment for $500,000. If they also pay $20,000 in royalties tied to the sale, this must be included in the transaction value. On the other hand, international transportation costs of $15,000 should be deducted if already included in the price. These adjustments ensure an accurate valuation and prevent unnecessary duties. So what happens when transaction value doesn't apply? Despite being the go-to method, transaction value isn't always applicable. In fact, there are other alternatives. If there are significant restrictions on how goods are used, if the sale isn't at arm's length such as related party transactions, or if the goods were provided free of charge, alternative methods must be used. This is where trade compliance expertise becomes essential. Let's talk about alternative methods of valuation. When transaction value isn't an option, customs rely on sequential methods. Identical merchandise valuation applies when there's a comparable product sold under similar conditions. If that's not available, the value of similar merchandise may be used. The key here is that the products must be nearly identical in composition, origin, and production. If neither of these works, customs turn to the deductive value method, which determines value based on the price the goods are sold for after importation, minus costs like transportation, duties, and general expenses. Alternatively, the computed value method calculates the sum of material costs, fabrication, and profit margins, offering another approach when previous methods don't apply. Finally, when no standard method fits, derived value, also known as the fallback method, uses adjusted versions of the other approaches to establish a fair customs value. Common valuation mistakes and their consequences. Errors in customs valuation can lead to severe consequences. Providing arbitrary or fictitious values violates trade compliance standards and can result in penalties. For example, an importer declaring a shipment of machinery at $50,000 when similar models consistently sell for $200,000 could raise red flags. Customs will scrutinize such discrepancies and may reject the declared value, leading to unexpected duty payments or legal repercussions. Another common mistake is failing to account for assists, such as materials or tools provided to a manufacturer at no cost. These must be included in the transaction value to maintain proper trade compliance as required by customs authority. Similarly, royalties or subsequent resale proceeds benefiting the seller must be factored into the customs value. Record-keeping and compliance requirements for custom valuation. Maintaining proper documentation is a core part of trade compliance. Customs authorities require detailed records of valuation calculations, contracts, and cost breakdowns. Without these, businesses risk audits, delays, and potential fines. Ensuring accurate valuation isn't just about following rules, it's about protecting your bottom line and keeping operations running smoothly. Here are important final thoughts about custom valuation. Understanding customs valuation is crucial for avoiding penalties and ensuring smooth trade operations. Every importer needs to get this right, and having expert guidance can make all the difference. BioPharma Trade specializes in trade compliance solutions, helping businesses navigate complex customs regulations with confidence. For expert assistance with customs valuation and trade compliance, visit BioPharma Trade's website today. Don't leave your compliance to chance. Ensure your business is protected and optimized for success.